Hello there, my friends. Chris Marcus here with you for the Miles Franklin channel. And today, grateful to be joined by Andy Schectman, founder of Miles Franklin, and also Mickey Fulp, the Mercenary Geologist. And we're going to be talking about some of the ratios in the precious metals markets, some of the anomalies that exist that can allow folks, even if prices don't move up just yet, some sources of opportunity and income while we wait for that move. So, gentlemen, great to have you on here today. And how are you both doing?
Doing well. Good to talk to you both.
Hey, Mickey. Glad you're joining us, Chris. Always good to be here.
Yeah, well, certainly exciting times in the market and a lot of the ratios to talk about today. Perhaps the first one we can start with that is on a lot of people's minds is the gold to silver ratio. I believe we're in the 83 to 85 range based on today's pricing. So, Mickey, what are you seeing with the gold to silver ratio to kick things off?
Well, the same thing I'm seeing with all the precious metals. The prices are completely out of whack. Very rare anomalous ratios going on for gold and silver. One thing we do, let me back up and say, part of what I do with my research assistant is calculate these ratios on a monthly basis. And we've done that going all the way back to 1970, which would be, a year and a half before US dollar was floated against gold. So prices were fixed before then. So the gold silver ratio above 80, almost 83 as we speak today, with a gold price of $12.86 and a silver price of about $15.50. That only occurs 8% of the time, 8% of the months in 49 years. So highly anomalous. I think I'll just go ahead and go through the other four while we're doing this. Platinum to gold ratio is at an all-time low in December. It sits at 0.64 right now. The all-time low is 0.63. With platinum currently trading today at 818 and gold at once again 1286. Platinum to palladium ratio nearly at its all-time low of 0.62. The all-time low is 0.60 back in 01 when Ford was hoarding palladium and the Russians were cutting off exports. That happens 6% of the time, less than one. And finally, the gold palladium ratio at 0.98 today. It is less than 11% of the time. And if you look at the charts, the only time those prices happened were when prices were fixed in the early 70s before all these metals were floated. And also in the aforementioned time when palladium went parabolic because of Ford and the Russians.
And Andy, any thoughts on that and any of the ratios you're looking at?
Yeah, to me, the gold to silver ratio is startling. It's as startling as people in the Florida Keys waking up to 4 feet of snow this morning. And if that were to happen, I don't think they'd run out and buy snowmobiles and pull in their lawn furniture. When you talk about a 85 ratio, 85 to 1, you have to understand that we've only seen that achieved or bettered one time in the last 50 years, in 1993, for a brief moment in 1993. And Mickey has been charting this back to 1970. I took the liberty of going back 100 years. You go back 100 years, you can see literally that the average between the two is roughly 40 to 1, give or take 40, 45. Over the last 50 years, maybe 45 to 1. I've heard from many, many people that I know in the mining industry that what's actually coming out of the ground is closer to 9 or 10 to 1 right now, as most of the low-lying fruit has been plucked and taken. I think that it is, there are ways to make money in this industry without spending more. And if you simply play the ratios, the return most of the time is really fantastic. The last time we saw this was 2010. And in 2010, we had an 80-to-1 ratio almost on the button. And within 1 year, we were closer to 30-to-1 as the ratio corrected. And I think long-term historical averages are there for a reason. And when you violate those averages so dramatically to one end, the magneticism will always pull you back to the mean. And so when I look at the gold to silver ratio, I think that it is a smart decision to consider trading some gold to silver. Not perhaps forever, but until that ratio normalizes. In my mind's eye, I see someone trading an ounce of gold into 80 ounces of silver. And when that ratio falls back to 40-to-1, going back to gold and doubling or better than that, depending upon where it ultimately ends up, that from which you started. When I take a look, Chris and Mickey, at the positioning of the most sophisticated traders on the globe, the commercial banks, and I see for the very first time in many, many years, and only like the third time in 50 years, that simultaneously to all these anomalies, and in particular in silver, that they are now going long on the paper side of things in the COMEX market, but also, according to Ted Butler, amassing 850 million ounces of physical silver in their house account, 8 times what the Hunt brothers tried to corner, the single largest physical position in the world, the largest position the world has ever seen. You put that into play with the fact that silver is trading below the cost of production and is priced completely and totally as an anomaly as it pertains to gold. The positioning of the traders, both physical and on paper, the undervaluation as it relates to pulling it out of the ground, the crazy ratio as it relates to its relationship to gold, it is screaming, buy silver or trade your gold for silver. And to me, when I look at these ratios, I see the exact same thing in platinum and palladium. When I think of those two metals, I think of 1 ounce of platinum buying 4 ounces of palladium. That's been my experience for as far back as I can remember. And to see it buying under 1 ounce right now, to see platinum that far ahead of, palladium that far ahead of platinum is startling to me. And when I look back, Mickey and Chris, over the last 30 years and what's made me successful, I would say, amongst other things, my strength has been in identifying and exploiting these anomalies. And typically they don't happen very often, and rarely do you see them, 2 or 3 or 4 of them happening at the same time. The bottom line is simply this: there are real opportunities right now. I say that to you with 100% sincerity. Real serious opportunities to trade an underpriced asset or an overpriced asset for an underpriced asset. And it's startling right now, gold to silver and platinum to palladium. If I own palladium, I'd be trading it yesterday for platinum. And if I own gold, I would give it strong consideration to trading it into silver right now.
Yeah, it's certainly interesting dynamics you mentioned, and perhaps we'll come back to the platinum palladium, which is a fascinating one. Although in terms of the gold to silver ratio, we hear a lot of folks comment on a 15-to-1 ratio. And from what I've seen and the analysts I've studied talk about what's in the Earth's crust, is somewhere between 8-to-1, 17-to-1, somewhere in that range. Yet what I find interesting is that both Keith Neumeyer, David Morgan, and others have mentioned that right now there's actually less above ground silver than gold. So again, there's a lot of factors that go into it, but just if you look at the supply and demand in a simple sense, if you have less above ground silver than gold and it's coming out of the Earth's crust at a ratio of 8 or 17-to-1, you could even make the argument that it would have to correct past that to adjust for what's actually above ground. And I'm curious of why you think it's gotten so far out of line when the fundamentals would indicate otherwise.
Well, I'll take that first, Mick, if you don't mind. First and foremost, the reason that those guys are saying that, in my opinion, is that they're looking at the manufacturing side of things, the industrial component. And if we go back 80 years or so, or even more, really, 80, 85 years, anything that conducts electricity, any single thing that you can think of, from a simple light switch to the first calculator you used in elementary school, to the refrigerator that you opened when you were 4 years old, to the first black and white TV, and anything in between, it has a little modicum of silver in it, a little tiny bit, but not enough to be worthy of scrapping it out of the trash heap. So much of what has been used in industry for the last 80 plus years is in landfills, gone forever. You don't say that about gold. Even an eighth of an ounce of gold is worth scrapping out of a motherboard. You don't say that with silver whatsoever. And as far as why it's got so out of whack, well, I'll put my conspiracy tinfoil hat on it. It's my opinion wholeheartedly that the price has been managed by the bullion banks, and in particular, JP Morgan. You go back over the last 50 years, they have been short 99% of the time. It's the funds, the index funds, and the mutual funds, the technical traders that have been long until the last couple of years. That's changed with all the new short funds that we see coming. Now the funds, right now, today, the funds are short, and the commercial banks, the most sophisticated traders on the globe, have flip-flopped, and they are going long. But the bottom line is, I think through the last several years, especially since JP Morgan inherited Bear Stearns short position in 2008, that the stepping on the silver price arguably has been for one of two reasons. Number one, Ted Butler will tell you, and it's public information, that in the tens of millions of ounces of silver JP Morgan has traded since 2008, and the thousands of trades they've made, they've never lost a penny. Not one penny on that short book. Never. So over the last 7, 8, 9, 10 years, they've proven that they can make a gazillion dollars by stepping on the price. But what's unusual is that over the last 3 or 4 years, they have amassed over 800 million ounces of physical silver. So ask yourself this. For 70% of the time, they didn't really have a big physical position at all. This is kind of a new deal. 70% of the time, they made all this money without ever losing any and not encumbering themselves with physical delivery. Then they've created, during that time, they created a perception of reality that allowed them to amass 800 million plus ounces of physical silver while nobody was looking. And so I think it's a very long, drawn out plan, but the bottom line is that they have ended up hoodwinking the technical traders into a very, very large short position, and they've gone long on paper, while over the last 3 to 4 years amassing the world's largest physical position of silver, the largest position the world's ever seen, rather, under the cover of darkness. So you don't see a prolonged period of time where an asset trades for less than it costs to pull it out of the ground if it's not being artificially suppressed.
Yeah, Mickey, your thoughts on that?
Yeah, well, I've got 2 or 3 thoughts. The ratios you said, 8 to 17, well, 8 or 9 or 10 even is, let's say 9. That's the ratio of 9 to 1 silver mine per year to gold mine per year. So last year with 98 million ounces of gold mine, and you multiply that by 9, and you're going to get something around the upper 800 million ounce level. So that basically is what the amount that JP Morgan holds is about 1 year's production of physical silver. The ratio of gold to silver in the crust, or let me say that again, the ratio of silver to gold in the crust is about 16 to 17 to 1. But if you look at the historic prices of gold to silver, and we do this not only since 1970, we've done it since 1792. And the only time the price ratio was less than 20 was when the prices were fixed until from 1792 to 1933, the prices were fixed and they were below, on occasion were below 20. They also hit below 20 when the Hunt brothers tried to take control of the market in the early 80s. Other than that, you'll never see ratios that low. The idea that gold to silver ratio is in the 80s, as Andy points out, is a screaming anomaly and a screaming buy for silver. Whether you choose to trade in your gold for silver is another matter. I am a hoarder of precious metals. Once I get gold, I personally never change back to anything else. If I was accumulating silver, which is a very good idea right now, I would buy it now on the intent that when the ratio normalizes, and the median ratio is 55 to 56 since 1970, that's when you sell your silver and go back to gold.
Yeah, and we're a bit of a ways from there, so certainly good news for silver investors and a lot to look forward to, in my own opinion. Yet, let's talk a little bit more about the platinum and palladium ratio, where we've seen palladium hit, I believe it hit record highs a couple months ago, and platinum down a little bit below that.
Palladium hit a record high today.
Okay,
so at 1312.
Wow.
So, Mickey, what are you seeing there in terms of the platinum palladium ratio, and especially for folks who might not be as familiar with that? Can you give a starting point of how to look at that?
Yeah, well, it is at an all-time low, essentially. It's 0.62 today, and the all-time low was when the market was severely manipulated in 2000, when Ford hoarded palladium because the Russians put an embargo on palladium to the West from their supplies at the Giant Norilsk mining complex. So this is an all-time record low, and that means if anybody out there owns palladium coins, you need to sell them right now and convert it to either gold or platinum. It makes no sense to buy palladium coins. It is the price has gone exponential, and when prices go exponential, they will go parabolic.
Andy, your take on that?
Well, first of all, I couldn't agree more. I think he said it as well as could be said. And back when Ford Motor Company took that position in 2000, prior to that, wasn't too many years before that, when unleaded catalytic converters used platinum. And now unleaded catalytic converters use palladium. Diesel catalytic converters use platinum. So what I think happened back around that time is the auto manufacturers, realizing that they have similar properties as it pertains to catalytics, they changed the manufacturing lines to use, or to, instead of using platinum, which was selling for 3 or 4 times the cost back in 2000, 3-4 times the cost. So they decided, in fact, it was 3 times the cost a year before. So they switched to palladium. They save 1/3, or 3 times rather. And now platinum is used in catalytics in diesel. When you throw in Dieselgate and the Volkswagen problem, platinum really took it on the chin. And it's unusual, highly unusual, to see not only the platinum palladium, but platinum gold. I mean, it's ridiculous. I can remember, I don't know, maybe it was 2008 or 9, maybe it was 2010. Gold was $850 and platinum was 3 times that, 22, 23. I'm ballparking it. The bottom line is that to see platinum as stepped on as it is, and in particular in relation to gold and especially palladium, it's absolutely crazy. When I think of capital preservation, I think of gold and I think of silver. Then I think of platinum, and then I kind of think of palladium. Palladium is an investment to me, and it's been a hell of an investment over the last couple of years. But pigs get fed and hogs get slaughtered. When you see a run of this magnitude, the whole idea is to buy low and sell high. So you sell at the top and convert down to an all-time low ratio into platinum, which is a screaming buy in relation to palladium. This is how you capitalize without spending any money in this industry. You capitalize on what is overvalued into undervalued. To see these 2 or 3 anomalies in price at the exact same time That's something I've never seen before. Typically, I'm jumping for joy when I see a once in a blue moon price anomaly. And to see 2 or 3 like this at the same time, it almost rings the alarm bells a little bit more loudly, thinking, hey, something's going on here, and maybe it's time to pay attention to them and to take history's lesson here and to move into something that is radically undervalued historically. So yeah, I think Mickey is right on the button there.
And Andy, for folks who are hearing this and may be interested in swapping, could you talk a little bit more about the programs Miles Franklin runs and how that would work?
Yeah, so we would offer the highest bid price in America on whatever people are trading. We make no commission on anything they're selling back, and we'll convert them right into whatever product they're looking for in platinum, silver, gold, whatever. We will, if need be, can send UPS air bills to help and assist with insured shipping, or can instruct and insist on sending things back by registered and insured mail. The bottom line is we can assist quite a bit in the shipping back to us, the insurance that is involved, and turn around and send everything back quickly, promptly, privately, and in most cases free of charge.
And I can confirm that because you actually even made it simple enough for me to send in metals once or twice. So if I could handle it, it's nice that you do make it easy to do. And what's the best way to reach you for folks who may be interested in swapping?
I appreciate it, Mickey. Our main line is 1-800, excuse me, I appreciate it, Chris and Mickey. Our main line is 1-800-822-8080. I can always be reached at andy@milesfranklin.com. I like to pride myself at my accessibility. I will always get back. My 800 number direct is 255-1129. But we have several brokers here who are able to help in my absence. I'm always happy to help if I'm here. And we would certainly welcome the call and the non-obligatory assessment of what people are holding. Call and say, hey, this is what I got. What can I get? And how does it work? We'll go through it, make it easy, and with no obligation whatsoever. Give us a call and we'll run you through the whole program.
Well, you do make it easy to do, which I think a lot of folks appreciate. So you have the contact information there. And Mickey, for folks who might want to know more about the fundamentals, digging into the ratios and really getting an idea of what might be the appropriate trade for them, can you let them know how they can reach you and some of the newsletter services you offer?
Sure. You can reach me, contact@mercenarygeologist.com. We answer all emails unless you are a troll. The website is mercenarygeologist.com. We do a tremendous amount of work on supply-demand fundamentals of not only precious metals, but base metals and oil and the Toronto Venture Exchange. Lots of work there. And finally, I will give a plug to Andy. I just bought a tranche of palladium coins, Vienna Philharmonics, at a very good price. I think Andy's going to have just about as good or better prices than anybody I see. And I'm just waiting for them to come in the mail, and they'll be here next week. And I can't wait to look at them. They are beautiful coins.
Well, thank you, Mickey. I appreciate that. They're platinum coins for the record. One other thing.
Oh, I forgot to say that.
You said palladium, but that's okay.
Oh, I'm sorry.
Neither here nor there. Don't want to confuse anyone, especially since we're telling them to trade their palladium to platinum.
Thanks for correcting me.
I would like to accentuate one thing. Price is important in this homogenous world we live in. Miles Franklin is in the state of Minnesota, and the only state in the United States that regulates the precious metals industry. We have a large surety bond and background checks of all of our employees every single year. It's the only state in the country where that happens. And so when you're dealing with Miles Franklin, who is very, very, very proud of our 29-year reputation without ever having a complaint and an A+ rating with the Better Business Bureau, the state of Minnesota will guarantee that it's the safest transaction in the industry. Bonded, background checked, annually, compliance, continuing education, and licensing that no one else in the industry has to abide by unless they sell into the state of Minnesota. So for what it's worth, we're very proud of our reputation. We work on that every single day. but the state of Minnesota will make sure that anyone who works with us will always be treated fairly from start to finish, no matter what, 100% of the time.
Yeah, and I'd just like to point out in closing here that before I joined Miles Franklin, I was actually looking for a place to have silver stored. And in doing my own research, being familiar with the precious metals community, I kept asking around where is a safe place to do that. And everyone kept saying, call Andy at Miles Franklin, which is how we got in touch. So again, maybe I'm a little biased here, but did want to pass that along because Andy does deliver on what he says there. And obviously in this industry, having people you can trust and have somewhere to go when things happen and know that you can be taken care of is very important. So with that said, gentlemen, thanks again for joining us on the show today. I think you provided a lot of great insight and especially some things for people to think about with the ratios. So again, for everyone listening at home, go ahead and hit that subscribe button so you can stay tuned. And really, again, Mickey and Andy, I think you're providing stuff that I can say personally after 11 years on Wall Street, nobody was commenting on, and I feel is a lot more valuable than what I saw there, what people get from some of the mainstream financial media. So thanks again for being on here, guys, and we'll look forward to checking in with you again soon.
Chris, you're the best. Mickey, you're the greatest, buddy. Thank you very much. I hope to see you real soon.
Thanks a lot, Chris and Andy. My pleasure.